Todos os dias quando acordo, não tenho mais o tempo que passou, mas tenho muito tempo.
O tempo muda tudo,
Temos
menos o amor. Feliz Dia das Mães Renner.
Hello, good afternoon, everyone. We're going to begin the video conference for the first quarter of Lojas Renner. We have Fabio Faccio, our CEO, and Daniel Santos, our CFO. Before handing over to them, I will give you a couple of messages. This is being recorded and streamed live. We will have the presentation in Portuguese on the screen, and you can click on the link in the chat to see the presentation in English. It's also on our website. For journalists, your questions can be directed to press office by phone 355-11-3165-9586. So before we proceed, we'd like to clarify that any potential statements made during this video conference related to business perspectives, operating and financial goals and projections are based on beliefs and assumptions based on information currently available, and therefore are not guarantees of performance. For the Q&A session, the questions can be made by audio, so you can raise your hand here by clicking on the icon in the platform or in the Q&A icon. After the comments made by Fabio and Daniel, I'll explain how that will work better. Over to you, Daniel. So thank you. Let's begin talking about our performance in net revenue in retail. We had robust growth in the first quarter at 63% year over year and 35% compared to the same quarter in 2019. This performance, when we analyze that and compare it to the market, and that's based on the BGE, approximately 65% of growth that we see here. And that means that Renner continues to grow its share in the segment and substantially higher than the market growth. In the first quarter, we saw sequential increase in some months. In January, we were impacted by Omicron. So we had tickets that were strongly affected in some brick and mortar stores, given that moment we were going through in the pandemic. And in February and March, we had an increase. The first quarter overall still had a flow of negative pieces and ticket, but in March, we were able to achieve positive figures compared to 2019. And when we do the internal math based on that impact in January, if we had had a normalized month, we would have grown 5% in the figures that we're showing here, 63.4% or 35%. So what do we see here? On one side, we have the transition into fall winter collection, and it's actually doing well in March. We already have positive sales in that. And also the omni supply with great operations, be it in stores or digitally. A highlight to the performance in our two divisions, where we have the 2 times of the consolidated, so growing 120%. And that makes us feel very confident in relation to the strategy that we have in those two divisions. April is still moving fast in number of pieces and transactions compared to 2019. And we see volume growth in number of pieces and ticket in 2 digits. The Mother's Day event, be it in digital or in brick and mortar, the assortment that we have is very well was very well chosen, and the stores teams are ready to enchant. And now, especially being so close to Mother's Day, we've had very positive sales. Moving on to the performance of our digital business. The growth of GMV in the quarter was approximately 38.7% year over year and 416% compared to 2019. So the total was 15.2% or 1% in 1Q22. And in April, we see that with the end of the restrictions, and now that they feel more comfortable going out into these shopping centers and sales centers, we see stronger movement in the stores. And even though brick and mortar has picked up, we're still growing our digital business. Our omni strategy has clearly shown to be effective, where customers are able to choose the most convenient channel. If they're out and about, they can go to shopping centers, brick and mortar stores, and then they go back to digital when they're at home. So it's been very efficient in this quarter and in the past months that we've seen a pickup in footfall. The good performance in digital is because on one side we have assortment and relation and plus content and fashion. So little by little, month after month, in that digital journey, we've been improving, be it in service level or be it through their experience on the website or the app. Today, the app accounts for 67% of online sales and bounces in between our sales made by affiliates and WhatsApp. We're still absolute leaders in MAU, and now we're the first leader. For the first time, we're the leader in visits. So Renner continues to be the top of mind in fashion retail. Gross margin. That was a bit of a concern in the last call. So I'd like to highlight that we had an important recovery year over year. So we achieved a gross margin of 55.1%, close to the pre-pandemic margin in 2019. And that performance reflects the gains in efficiency, especially in relation to the decrease in markdowns, which is at the lowest level in the past 10 years. And that's a result of the assertiveness of the collection. When you get the collection right, when consumers love it and want to buy, and the correct composition and makeup of inventory. And even with the partial makeup of inflation, has enabled us to go back to historical margins in 2019. Without a doubt, maintaining healthy margins, that challenge will continue during the year, given the economic environment. But we believe that the right collection with less markdowns will enable us to maintain gross margin in line with the levels in 2019, and that's what we expect for 2022. About SG&A, we presented this slide on our last call, and I'd like to go over it again. I'd like to remind you that this is SG&A after IFRS 16. That doesn't include rent costs. So on the left, you see we have a very positive evolution year over year. Because of a bigger business scale, a growth of 60% has helped in gaining scale. But at the same time, we've had efficiency gains, especially in the digital operations. When we compare that to 2019, we still have a higher SG&A base, 4.7 percentage points higher than the pre-pandemic levels. But let's read this together. So it'll give us more clarity of the share of SG&A in net operating revenues. So first of all, we have a 2 percentage point increase, basically resulting from the inflation. What we call BAU is most of the expenses that the Renner stores have for operations. We had record inflation in this 13-year period or 3-year period, and that puts pressure on the base. And we still have the volume that's negative in the first quarter. We had an impact in January, and that made the entire base negative. In addition, we have the cost of the new distribution center in the city of Cabreúva, interior of the state of São Paulo, which will start up in April, or has started up in April. And as it's being activated during the year, we're going to have duplicate costs, especially in terms of staff. And that cost during 2022, as we activate the distribution center, that will decrease. And in 2023, when it's fully operational, we'll have the gains and savings related to our logistics operations that we will see in 2023. Another important thing that we have to have in mind is the natural pressure from store expansion that were open in the past 2 years. These stores are performing well, but they're not at the same maturity level that they would have been if we hadn't had the pandemic. Now let's talk about the second block here. That's our digital operation. It still has a cost that's higher than brick and mortar, and it generates an impact to the total SG&A. The third block is the expenses to gain efficiencies in our ecosystem, the entire framework that we have currently dedicated to build that ecosystem, that omni ecosystem. When we put these last two blocks into context, there are important points here. So the pandemic enabled digital to move faster from 4 to 15%. Clearly, back then, when that moved faster, we weren't 100% ready to handle that growth, be it in shipping or digital marketing costs. And since then, we have been continuously gaining efficiency, and that efficiency gain, on one hand, we have our new DC that after implemented will give us 3 percentage points of margin in digital. I already mentioned that in the last call. And in addition, when we integrate the off scale, so the volume that we have in stores with the digital operations and using the last mile and activating the points, that will give us even more efficiencies in our digital logistics costs. In data integration, all the focus that we have on data will enable us to have pricing decision and shipping decisions more streamlined and improving that equation. We also have CRM and loyalty initiatives, from more customer retention to more recurrence. During 2022, we've already had efficiency gains in digital as a result of those initiatives. We see the results in freight acquisition and a reduction of 6.2%. So there are efficiency gains that we've seen in the quarter of 22 year over year. And in 2023, by implementing the plans that we have, we will continue to have gains in efficiency. And during 2023, when the entire logistics operation is ready and working, the CRM framework and the loyalty program will see more structural profitability in the digital channel being closer to brick and mortar. In 22 and 23, we will continue to gain efficiency in the digital operations, having gains of scale enabling us to dilute that SG&A. Now about Realize, the Realize portfolio. We had an increase in financial services results and mainly driven by the higher volume in portfolio and the spending of Meu Cartão, and that shows how we're spreading that product. In relation to losses, the first thing I'd like to highlight is that in the comparison to 2021 and 2020, it is affected because in the pandemic, we had a strong provision given this scenario. And as the scenario showed to be less problematic, that provision went back to 2021. We see a very high amount in 20 and higher in 21. It's not a comparable base for us to reach a conclusion. When we compare that to a more normalized base, we do see an increase in losses, but that is in line with our expectations and according to the history of similar economic moments that we're going through. So it's not a surprise to us what we see in that portfolio in 2022. A route past due and in Meu Cartão, we're looking for more profitability and taking that to more normalized levels for that product. The delinquency levels of the total portfolio also reflects the current macroeconomic scenario. It's in line with our strategy to profitabilize the portfolio. And as I mentioned, it's in line with historical levels and our expectation for the period. We believe that in the second quarter, we'll have continuous growth of the portfolio with replenishment of revenues, but we have to bear in mind that that comparison to 2021 will still be affected by the 2020-21 period and the dynamics in those 2 years and where we had the provisions. We continue with the expectations that for the full year of 2022, we would have absolute results similar to 2019. About the EBITDA, total EBITDA of 2020-2022 was 12 times higher compared to 1Q21, mainly resulting from the improvement in retail and financial services in the operation. And in addition to that, we see a net income that's 23% higher compared to 2019, also reflected the positive operations, and our cash position is higher, and with an increase in the interest rates, we have the result of financial services that is more positive than the previous period. And we also see lower income tax level, be it resulting from the follow-on we had last year, and also tax incentives, especially the ones that we call that are related to investment and related to imports that are higher given the high level of imports. So the behavior of that during the year is not exactly proportional to billing. It's higher in Q1 when we have a higher level of imports to be able to operate the inventory levels during the year. So it's higher in the first quarter. For the second quarter, 22, we expect to continue to increase our EBITDA. And we believe and that the absolute EBITDA before IFRS will continue to increase compared to the levels in 2019, and that's our expectation for all of 2022, to end the year with a nominal EBITDA pre-IFRS similar to 2019. Now I'm going to hand over to Fabio. Thank you, Daniel. It's important to mention that in addition to the sequential evolution that Daniel has showed us about performance through the quarter, and after the quarter, now that he's mentioned April and Mother's Day, we have positive expectations for the year and also maintain our focus in the long-term strategy. Our objective is to be the largest ecosystem in fashion and lifestyle in Latin America, offering a more complete and relevant journey for our customers. And enchantment is part of our purpose. That's why we're increasing our base in a growing way, increasing recurrence, lifetime value, stickiness. And on the next slides, I'll show you some of the advances that we've had to the main fronts. So when we think about our priorities, one of them is to continue to advance in Omni. Daniel has already mentioned that in the quarter, it's shown to be the right strategy, and we continue to advance in that. It is our priority. So we have deliveries in up to 2 days. We have same day, next day, or maximum 2 days on the country average. We had an increase of 18 percentage points year over year. And when we look at the metropolitan region, the greater Sao Paulo area and Rio de Janeiro, where we have the biggest markets, we had an increase in same day in D+1. So next day tops of 27 percentage points year over year. And even so, even with that improvement in service level, concerning the cost per shipment, we had a reduction of 24% year over year, even with the entire inflationary pressure and improvement of service level. Now in April, we acquired ULO. It's a native digital log tech focused on experience and real-time management of the last mile. That's fundamental for last mile management so we can gain more efficiency with more speed and quality. So we're integrating with ULO. It hasn't positively impacted us yet, but we're absolutely sure that not only ULO as a company will be able to grow, but it can also add a lot to our logistics ecosystem. And as Daniel mentioned, we started up the operation of our distribution center in April, and we started with the first operations for Camicado. And during the second half, we'll start the transfer of some of the operations in fashion. About channel diversification for the channels available, we've been gaining relevance with a highlight to our favorites program on WhatsApp. And if we add the new channels, Marketplace, B2B, WhatsApp, and favorites, that already accounts for 22% of the digital GMV. Obviously, our highest share, as Daniel mentioned, is app sales, and that is our strategy, app first. So we're still growing a lot in app sales. In the stores operation, digitization has also advanced. We've been implementing more self-service checkout and using the Pague Digital, which was restricted to Meu Cartão and the Renner card. And now we're using third-party cards, and that should increase the Pague Digital tool even more. That's important for speed in stores, convenience, and digitalization for the stores and customers by increasing our customer base on the Renner app. We also have an expansion plan. We've inaugurated 2 units in the quarter, in the first quarter, 1 Renner and 1 Camicado. Up to the time being, up to yesterday, we had 10, and now we have another one, so it's 11 stores in the year. And out of those 11, 7 of them are in places where we were not present yet. So that's additional sales, not only for brick and mortar, but also digital. So it's worth mentioning that when we open a store in a new place, we add on average 20 percentage points for digital sales in that same city or place as well. For the year, our expectation is to open approximately 40 stores. And the share of Omni customers has doubled compared to 2020, and it already accounts for 30% of revenues in our ecosystem. So that really increases our potential because Omni customers have a higher spend, on average 3 times higher than other customers that only buy on one channel. In CRM, we continue to advance. Daniel mentioned that was an important share that's been improving our performance in digital, not only in sales, but also in channel profitability. We already have an active customer base of approximately 18.3 million active customers with an evolution of 31.3% year over year, with an increase in retention of 10 percentage points, also higher than the previous year. It's also worth noting that customer base, we have already found 85% of all our revenue so that we know these customers better, their consumer data, their consumption data, so we can offer them a better journey. In branding, in the branding pillar, we've increased in content, we've increased the participation of our influencers and new channels. We have 500 new ones. We've had more live sessions. We're bringing in more knowledge, flow, engagement, and customer profitability. So we had 11 sessions in the quarter, in addition to a marathon with 25 sessions on Instagram alone in March. With that, we had an increase of 85% of the digital flow coming from those campaigns and an increase in 20% in Instagram posts. We lowered the customer acquisition costs on digital. So that shows us that we're on the right path to strengthen the brand's presence in digital, to gain flow, to gain value with efficiency, with increasingly more efficiency. About marketplace, that's an important action in our advances in digital. It's important to stress that our strategy is to increase assortment, especially in categories that add on to our core business. So in that sense, Renner and Camicado are still working on sellers and categories with a lot of curatorship and selective items. So in Renner, we have approximately 240 sellers with 37% increase in this assortment, focusing on adding on to products, categories, and price ranges. In Camicado, we have 255 sellers, and we continue to advance in the curatorship with our partners, focusing on categories that are add-ons. So we can strengthen the synergy of the brands in the ecosystem. So Camicado and Youcom in the Renner marketplace are among the top 5 sellers at Renner. And when we bring together the two marketplaces, Renner and Camicado, they already account for 7.2% of GMV in digital, bringing in more flow and a benefit of cross-selling for our 1P products, in addition to the convenience for customer when you add on different categories and price ranges, increasing the flow for all of us and our sellers. On the next slide, we talk about Realize, our financial services company that continues with a number of initiatives to occupy our ecosystem. So we've increased our active customer base by 27% year over year. And with that, we had a growth of 64% in total payment volume, achieving 3.7 billion. The customer base growth brought on a very positive reflection on the spend of these customers out of the ecosystem, and it already accounts for 56% of the quarter. And the churn is lower by 53% year over year as well. In the Realize digitization, it's worth mentioning that 90% of our customer base have already interacted digitally with Realize. So access to our digital channels grew 31% year over year. We also had advances in prioritizing the offer of Meu Cartão, an increase of 111% in how many were captured. And we've we already have that in 100% of the Camicado stores, which wasn't a reality in the past. That's why we're expanding Realize's presence in our ecosystem. So 56% of our active base is comprised of Meu Cartão customers, a growth of 17.7 percentage points year over year as well. For the Renner card, we've also had evolution as well, with the highlight of the card in all the Ucom stores as well. And in digital, with the pilot, we're doing a co-building process with the complete solution and to expand that solution to more places as of the second quarter. About the leveraging of our ecosystem and using data and technology, we continue to advance by applying AI in deciding the assortment and guiding us in each store according to local customer preference, and also the e-commerce orders in that region, positioning our inventory levels even better and improving service for our customers. About the sales forecast, we have stability in the forecast models, which also increases the use of our system in recommending actions with the change in trend, depth, assortment, and presentation of subclasses and SKUs to improve the performance of each unit as well. And replenishment, that's a front that we started a while back. So we continue to advance in that as well. We maintain replenishment with AI in the core fashion items that account for 43% of sales. And we've also been advancing more and in SKUs to gain more granularity in that assertiveness. In addition, UCOM is also coming in with the scope of items that already accounts for 11% of sales in that model, and in Camicado, 10% of sales are already being replenished with AI. In addition to replenishment, assortment decisions, upon purchase, we have tools for volume suggestion, which enables our inventory to become increasingly more assertive, as well as a more integrated production chain to avoid any rupture or excess items. In regards to prices, we continue to work on our markdown engine, and our pricing engine is evolving at Camicado, where we have 16% of sales that are already under that pricing engine model. On the next slide, I'm going to talk about ESG. We're very happy to say that in this quarter, we've inaugurated our second circular store with a concept of circular economy, circularity, in addition to digital transformation. For the fifth consecutive year, we are part of the global S&P Sustainability Index. We've evolved into the gold ranking, and we had the highest global score among all retailers. So with that, we'd like to stress our commitment to promote respect towards sustainability. And also in social, we recently signed the commitment letter of the economic empowerment for refugees and migrants from UN Women. We were also recognized by the Carbon Disclosure Project as a leader in supplier engagement, being the only Brazilian fashion retailer in that ranking. In governance, we had our general shareholders meeting on April 27, which was partially digital and in person. It was hybrid, so 82.2% of our capital stock was present in all of the agenda was approved. In January, also, the board approved the buyback program. The total number of shares to be acquired is up to 18 million shares in up to 18 months. It's worth noting that by the end of April, we had already bought back 56.7% of the total amount approved by the program. So in summary, we've done a lot already, but there's still more to come. So on this slide, we're trying to give you the order of magnitude of our initiatives last year and this year, but showing that we still have more to do. We say that there's still many gains in efficiency to achieve in 22, 23, and 24. So we want to give you some estimates here. An example in digital assortment, where we've already increased by 24% in the quarter, but we have an ambition of increasing that even more, expanding the or increasing the assortment for our customers and consequently increasing sales. In CRM, the base has grown 31.1%. It will continue to grow. Our service level for online customers, where we started at 0 deliveries, and we've increased that by 18 percentage points year over year. So we should achieve a bigger, even bigger base, approximately 80% in the next years, based on the service level that we believe is the minimum to service our customers at a lower cost. In Omni, our customer base continues to increase. We currently have 18 million customers that are present in different channels, and we continue to grow. Costs to attract our customers. The customer acquisition cost over revenues has been sequentially dropping. At Realize, the revenues from services has gained relevance and will continue to increase. And so we move into the second quarter of the year. Daniel has already mentioned that the sales in April were very good. In the beginning of May, we're close to Mother's Day. Sales are positive. In April and May, they're greater than our initial expectations. So we're very much ready for the reality that we've been seeing now and moving forward. We continue committed to our purpose to consolidate as the leading ecosystem in Latin America, and we're very optimistic about the short term. We've seen a very significant demand for our products, market gains. So we're absolutely sure that the investments that we've made in the pandemic and are still making now have brought on a differential for our companies. So we continue to act on our priorities, expediting online, growing digital share, increasing our omni customer base, investing in logistics and technological platforms, as they are essential for us to advance in this service level and gain productivity, making many improvements in responsiveness and the demand in time to market, having the right product at the right time in the right place, so we can have a chain that's increasingly more integrated and fast. And our investments at Realize, which on its own is already a very important business and adds value to all of us and our partners in the ecosystem. With all of that and being highly focused, we're looking for generating more value, productivity, and efficiency in our operations. Daniel, I believe, has already mentioned this, how much we're growing above the market. This is a line of the monthly survey of trade. You can see that there is market consolidation going on. We still see that happening. And as what happened in different times, we've been expanding our market gain, and we believe that this time we have an even better opportunity to do that as a result of the depth of the crisis and the significance of this crisis, the market frailty, and at the same time, all the efforts and investments and initiatives that we have done in that sense to improve our company. So based on the consumer point of view, because it's a moment where a consumer will look for a brand that they trust more, and we've been investing so that we not only they will not only trust us based on our past performance, but also for the future as well. And that's how we believe we can gain even more with that. And to conclude the presentation, you can see that that trust and the investments that we've been making, we can tell that customers can see the value in our investments. You can see that during the past years, we've exceeded our historical level of our enchantometer. So once again, in the first quarter of 22, we've beat our records. And that's to show that we do know that there's many things for us to improve. That's why we're still investing, but it does show us that we're on the right path. And even though there's still a number of different opportunities, the strategy is right, the path is right, and we believe we will see growing gains for every period that's coming. I think we talk too much, right? We want to leave some time for Q&A, so I'm going to hand back over to Carla. Thank you, Fabio and Daniel. And now we're going to begin the Q&A session. You can ask them out loud, just click on the button, raise your hand, or ask a question in the Q&A button. I'm going to start with the audio questions from Elena Vinares from Itaú. You can unmute. Hi, everyone. Can you hear me? Yes, we can. Okay, we have two questions on our side at Itaú. Thank you for taking our questions. The first one is that you've shared a lot about logistics, the distribution center, the ULO, everything that you've been doing. What do you think about the midterm, about what's still missing, or was that the investment that you wanted? And you, during the call, you also shared about how we could think about the ramp up, but thinking 3-4 years into the future, how big do you think the ULO operation would be, or distribution center capacity? We want to look at logistics in the medium term. Second point that you shared during the call in the release is the use of AI and how you've been focusing on that in many different areas of the operation. And that's a very interesting aspect. We see in global players that have very successful operations. We see that as well. So what do you think are the main learnings in using AI? What have been the main challenges? So those are two questions. Thank you. I'll start, Helena, and then Daniel can add afterwards. About your first question, and thank you for your questions. About logistics, we have a strategy, an important strategy in our logistics platform, which is positioning inventory, the entire logistics operation, fulfillment and network, and supply, handling and supply of customers. So when we look at the investments, relevant investments that we made in the new DC, it's a heart, I'd say, for brick and mortar stores and last mile in the omni operations, digital operation, with very modern technologies in the distribution center. It will be the most modern in our segment in Latin America. And that will bring on higher levels of efficiency for our operation. And when I say efficiency, not only in speed, but also in cost, in replenishing stores and also delivering to our customers. And also an opportunity to scale that up, which is very important in logistics. So we'll have a win-win situation. We're going to bring in all our operations to the same engine, to the same heart, and we gain synergy in freight and transportation, and soon even service our partners, and we can gain more scale, frequency, cost reduction, and gain in service level for everyone. That's not just the DC operation. That's an important thing. There's also the positioning of the inventory to gain efficiency in cost and speed. And about ULO, managing that last mile. I think we can help to scale up ULO's presence, and they can give us better management in our last mile, giving us more efficiency. For investments, we definitely still have some things to do, but a more relevant part of that was focused on the new distribution center when we think of investment. Daniel? Yeah, the most relevant part is behind us already. And our priorities going forward are executing all of that, really starting that up, integrating ULO with the operation. Unless we have a very giant volume growth, which would make us very happy, then we would consider additional investment. But this DC is sufficiently sized to operate to work with our operations for the next 5-6 years. Second question, Helena, about the learnings in AI and algorithms and so on. There are many, because modeling that in a scenario with so much volatility is really hard. We could have even deployed some solutions even faster, but we're a bit conservative, I'd say, in some aspects, because if you automate some solutions without being sure of it, you'll make it worse. So I'd say that we're being very realistic. We don't want to move up too fast. Things that can help, of course, but in times of volatility could even make things worse. So we're scaling that up in a very conscientious manner so that we can use the tools and the solutions to have gains in efficiency and profitability and positioning of inventory and pricing and volume decisions that are better. So we've been looking to be very careful and not speed things up too much and worsen them at the end. So that's why we've had gains. If we were just focusing on doing faster, I don't think our gains would have been so good. Thank you, very clear. Next question is from Ruben from Santander. Go ahead. Hi, everyone. Good afternoon. Thank you for taking my question. I'd like to follow up on Helena's question about investment. It seems like most of it has already been done. But can you give us an update on your CapEx expectations for the year? I think there was some downs because of the distribution center opening and store opening. So I'd like to think about the amount for the year, what we should expect. And given that most of the investments have already been made, what should we think about capital allocation going forward? Because the cash generation should improve during the year, as you mentioned. So the payout and the share buyback, can you give us an update on that? Fabio mentioned that the program that you just started in the beginning of the year, you already bought back almost 60%. So is there room to increase that buyback program or speed that up? Thank you, Ruben. Starting off with CapEx, our vision for this year in investment is approximately 1 billion. And in that, we have strong investments in the ecosystem, which are related to technology. We still have some last investments in the DC and then store openings and expansion. So about the buyback, we already bought back 56%. Obviously, we've been monitoring the shares and all of them are operating at lower levels. So we'd like to take advantage of lower prices, and at some point we might speed that up. So in that existing program that we've already disclosed in the beginning of January, we should be able to expedite that and finish it earlier. Okay, thank you. Next question is from Danny from XP. Go ahead. Thank you. Good afternoon, everyone. Thank you for taking my question. My first one is pretty much a follow-up to Ruben's question, but more on a capital framework angle. So I'd like to know, what do you think about your current framework? I know that there's a macro challenge, which is good. Sometimes you have a higher liquidity buffer. So I'd like to hear your vision, Danny. What would be the ideal capital framework and maybe a higher payout level, according to what Ruben said? So I'd like to hear your vision on that. And the other one is about EBITDA margin dynamics. Daniel, you mentioned dilution of SG&A as from a specific point. I think I lost that. So when will we start seeing the margin, the gross margin going back to normal and being reflected on the EBITDA margin? And what do you think would be a normalized EBITDA margin in your ecosystem with a digital share and might have more pressure, margin pressure on that? So those are my questions. Thank you, Danny. Let's take that step by step. First of all, let's talk about the capital structure. As you mentioned, it was adequate for the moment that we were going through the follow-on when it happened, and you see all the investment that was made. When we consider 2021 and 2022, so 21, when you consider CapEx and OpEx 1.3 and 22 OpEx, CapEx, Uello and the distribution center, all of that would total approximately 3 billion BRL. So we're using those funds that entered the company last year. But we are aware that we still have a high cash position, so the capital structure could be improved. That discussion is part of the agenda. We're looking at our strategy in relation to new businesses, maybe new acquisitions that can be done to streamline and expedite the building of our ecosystem. And now in August, September, we should look at what we can do to improve that capital structure. That's what we can share with you at this time. About your second point, what was that again? The EBITDA margin. Evolution in the short term, dilution, and what would be a normal level. Thank you. That's the number one question always, right? In the next quarters, we'll see a sequential evolution and improvement of our EBITDA margin. All of us have the 2019 EBITDA margin as reference. So at this time, what I can share is that we will continue to see a positive evolution of the EBITDA margin. And given it's a new business model, because before we only had brick and mortar, and now we're going to have digital stores, an ecosystem, new services, what we've been making very clear is that we believe that our EBITDA generation and for company growth and EBITDA generation will be higher. It will be different. And considering a capital return from 15 to 20%, that's what we want to achieve. And being able to achieve the same level of the 2019 EBITDA, it's something that's hard to say when and if it's possible to get there. But in the upcoming quarters, we'll have a sequential improvement and that gap will become increasingly smaller. Okay, great. Thank you. Next question is from João Soares, Citi. Hi, João. Unmute, please. Hi, Carla. Good afternoon, everyone. I'd like to hear about your sales. We see sales going faster, and your breakdown was very clear. What's traffic, what's price. So in the short term, I'd like to know about the evolution. What's driving the sales now? Is it because the mobility is coming back and prices are heating up? Can you give us some flavor how you see the sales sustainability? And another interesting aspect is the market share dynamics that you've shared. Can you talk more about where you're getting market share gains? Where do you see better opportunities for growth in which cities? And last, if you allow me, about the portfolio. Daniel mentioned that a lot and that you expect growth in the short term. So I'd like to hear about, and like you mentioned, absolute results in the year should be similar to 2019. So what about delinquency? In the Realize results, what is your opinion about delinquency? Thank you, João. I'll answer your first question, and Daniel will answer the rest. Well, about sales, we've seen growing movement. I think January was an outlier because of Omicron. February was good, March better, April even better, and May seems good as well. We're still in the beginning and in the most important moment of the month. March was very good. April and May has been very good in sales. And part of that, we see market share gains. We also see a recovery in the industry. Increase in population mobility leads to a demand for fashion items, even more, a higher demand. So people have more demand and higher consumption because more mobility. They're going to go to parties, social events, go back to work. And that's for the entire industry. And in the industry, we do have market share gain. And that usually happen during times like these, where companies that have a better value proposition and that consumers trust. And the other part is because of the better assertiveness of our collections, the right product, excellent value proposition. And the other aspect, because of the investments that we've made, because in fact, we have invested, especially in 21 and 22, and the investment brings the return. It's starting to show why it was made. So we have better service level, we have more channels working, growth comes from all sides. So important recovery in brick and mortar, but continuous growth in digital as well. So it's a consolidated of increase in demand, gain in market share, and that gain in market share is because a very adequate value proposition and because of all the investments we've made for that. That's very sustainable during the year. Obviously, it's hard to say how that will be going forward. We still have the rest of May ahead of us. In June, we have Valentine's Day in Brazil, and then we still have the middle of winter, and then we have the election in the second half. So there are many different variables. We can't really say how things will be going forward. But what we see currently is even higher than what we expected. And let's see how that will behave. So the market gains and the investments that we made are long lasting and sustainable. So I believe that that should continue. João, about the Realize portfolio and how we see that going forward, we will see an increase in that. We'll continue to explore that. We'll be fully using the Renner customer base, be it by offering cards through Ucom, Camicado, or even the Renner stores. So we'll see that increasing. But obviously, granting credit, because we're going to monitor that, and their credit team has been monitored that on a daily basis about how we can manage risk in the current situation. Fortunately, we have a number of information that's available, and the team can calibrate that, be it the place or region. They can calibrate the credit supply for the portfolio. So when you increase the portfolio in nominal losses, the amount will increase. But with the credit policy that we will have, we should be able to adjust that and have good profitability and reach the level that we expect, which is to achieve the total EBITDA that we had in 2019. Great. Congratulations on your results. Thank you, Joel. Next question is from Richard from DDI. Hi, Carla. Hi, everyone. Good afternoon. Thank you for taking my question. I'd like to know about slide 15, where you show us the progress that you've had in some metrics and KPIs in the ecosystem and what you have for 2024 and 2025, and others that you've been advancing, active customers and customer base and so on. So I'd like to know if you're more advanced for what you expected at this time. If it in the upcoming quarters and next year, if those goals would be reviewed upwards, just to understand where you're at on that journey. So if you would have an even bolder goal for the future. Thank you for your question, Richard. Very interesting. Without specifically going into one, but in the consolidated of everything, when we look at the first quarter, is that it's very much in line with the expectations, not only in results, but also in deliveries. When we evolve sequentially in sales and deliveries, we've evolved sequentially. So I say that a snapshot for the end of the first quarter, we are according to expectations, very close, a bit higher, and also in the deliveries as well. So we see a sequential improvement. At this time, still the beginning of the second quarter, not only in sales, but also delivery, we see a sequential improvement. So in the snapshot, we're above our expectations in deliveries as well, but there's still a lot to consider if that will reflect an improvement in 24 and 25. First quarter is in line, and now we're detaching from that and improving in our expectations and deliveries as well. Okay, excellent. Thank you, Fabio. Next question is from Joseph from JP Morgan. How are you? Good afternoon, Carla, Fabio, Danielle. Thank you for taking my question. I'd like to talk about the connection of Realize with the company's fashion ecosystem. So you're mentioning a lot using Meu Cartão, a portfolio that's very expressive. I'd like to explore how the Realize customer has behaved in the omni world and how that compares. When you compare the Realize customer and omni or the purely digital customers to see the real actual power of that ecosystem. And the second point is, what are you doing in opportunities? You mentioned financial incentives like cashback, and if that's a driver for use and engagement. So I'd like to explore what you've seen in that sense. And lastly, looking at the system makeup, the surprise for the quarter was UCOM. So how do you see the potential to build digital native brands in Renner for the fashion ecosystem? So UCOM is a off of Renner lifestyle, but maybe building other brands and other categories. Thank you.
Obrigado, Joseph.
Thank you, Joseph.
Bom, acho que sobre a primeira parte da tua pergunta aí,
For the
né,
first
da
part of your
importância do cliente
question
Realize,
about
a
the
gente até
importance
citou
of the
aqui um
Realize
tema,
customer and Realize's importance to
até
the
então, né,
ecosystem,
dar um
it's
exemplo
very
aí para
relevant.
você
Let me give you an
mencionar
example. You
Realize,
mentioned Realize customers
como é que é a relação deles dentro das nossas
and
marcas,
their
né? A gente fala
relationship
muito do cliente
with our
Omni,
brands. We talk a lot
geração
about
nova,
the
né,
Omni
geração
customers
tradicional
that
que compra por um
have
canal só. Quando a gente fala
three
de
times more
Realize
spend than the ones that spend on just one
além
channel.
de uma
And when we
marca
talk about
dentro,
Realize
né, que
that
é um
work
cliente Realize, é um cliente
in
Renner,
more
Yukon, Renner e
ecosystems,
Kamikado,
so Renner and Yukon, Renner and
que tem
Kamikado, that type of
mais
customer
gasto
spends
por
7 times more than other customers.
sim um cliente importante.
So
Aí quando
yes,
você
it
pega
is
um
an
cliente
important
Realize
customer. So when
dentro
we
de um
see
canal,
Realize
né, ele
customer,
maior sendo Omni, ele tem
if
um
it's
custo
one
maior.
channel, they have a higher
Quanto
spend.
mais
If it's
presente
Omni, they have a higher spend. If it's multi-brand in the ecosystem, that's even
aqui
higher
a gente
spend.
diz
So the importance of the customer
relevante,
is
né?
very relevant.
Negócio
Realize
que, claro,
as a
tem que
business on
amadurecer,
its
tem
own
muita
still has a lot to
oportunidade de
grow
de sortimento, de produtos e
and a
serviços,
lot of
mas a gente vai
opportunities and
crescer
increase
de uma
assortment and
forma
services and be more present in the ecosystem
muito focado 100% na
because it
marca
very
Renner e
much
agora
focused on the
atualmente
Renner
temos
brand. And now it's
uma presença
starting
maior com
to
Kamikado, com
have
Yukon e com os demais
more of
parceiros
that
que
with
estão
Kamikado,
junto
UCOM, and other partners in the
para além de
ecosystem.
fomentar também
So we can
esse
also
benefício aos clientes, né? Não
foster
é
and
a gente
offer
ainda
that
está no
benefit for
teste, né, piloto
customers.
do nosso
We're
programa
in the
de
test, in the
loyalty que vai
pilot
ser
of
lançado
our
agora
loyalty
no final do
program
ano
that should be launched by the end of the year.
e vem testando muito
So
porque
we've been
sempre
testing that a
houve
lot
muito
because
cashback,
we
né? A gente
don't
tem muito
want
programa
to
de
just
cashback
be a
que
cashback
é um
program.
benefício ao cliente, mas a gente
We
quer
know it's a benefit for
facilitar
customers,
com
but we
que
see a lot
tenham
of that.
up
And we've been
e
testing
também
that a lot in the pilot
para os
in
clientes
offering
que
benefits
façam
for our
sentido para eles,
customers that
que
make
aproveitem
sense for
a
them and
experiência e
leverage
façam
their
essa experiência
experience, making them a
cross-brand,
cross
né? E que não seja
brand
dependente só de
customer
cashback, né? Por isso que a
that
gente
don't just
está
depend on
começando um
cashbacks.
programa que a gente
So
espera
we're creating a program that we believe
diferencial para os nossos clientes, né?
will
Para a gente também
be
performar
something
esse
that will
relacionamento tão importante que a
is
gente
very
tem
different
com
for our
o
customers
Realize.
and for us as well, because they're very important for all
Com
the brands
relação
that you
à
mentioned.
segunda pergunta aí
About your
do
second
Yukon, né?
question about
A gente tem
UCOM,
visto um crescimento importante, né?
we've seen
Yukon
important growth
é uma é um
on
negócio
you
que a
at
gente
UCOM.
lançou algum tempo atrás,
It's
né?
something that we launched a while
Trabalhando
back,
bastante, a gente vem
and we've been working on
aperfeiçoando
it a
esse
lot.
modelo.
We've been
A gente está num
improving
nível
that model,
muito bom
and I believe we're at a
ações
very good
muito
level.
bacanas
The
que
collections are very nice.
os nossos clientes da Yukon
Our
falam que
UCOM customers,
são, são fãs da marca, né? Tem uma interação muito
our
forte
brand
com a
fans, they
marca, né?
strongly
Muito
interact with
amado.
the brand. It's a
A gente
loved
está lidando
brand,
com
and it's been
visibilidade
making us very
muito
happy.
bacana.
We've done great
É um
work with
modelo
it.
diferente, né, do que a
It
gente
is a
tinha
different model
no
than what we had in the main
isso
operation at Renner.
né, nos
And
permite
yes, it
pensar
does
que a
enable
gente
us to
pode
think
sim ter oportunidade para uma outra marca mais
that we can have an
forte, lógico,
opportunity
especializada, né, atingir
for another brand, a
um target
specialized
específico,
brand
como foi o caso da
for
Yukon. Não temos
a
nada
specific target audience.
né,
Right now, we don't have anything in mind,
nesse
no
momento,
projects to be
mas
launched,
mostra que
but
existem
yes, it shows
oportunidades
us that there's an
para aplicar
opportunity
talvez em
for
outros canais, né,
having
para clientes
projects
como a gente
like
teve na
that
Yukon que
for
tem esse
specific
crescimento
target audiences as we had for UConn and
muito
had
bom.
a significant, as you can see, has had significant growth. Thank you, Fabio. I have a question from Irma, Goldman Sachs. I'd like to know about the competition of third-party cards. So at what level do you see the share in sales being stabilized? And what are the differentials that you are offering and will still offer to defend and grow the base and share of your own cards? Daniel? Thank you, Irma, for your question. Well, first of all, let's put that into context, right? What's been happening in the past 2 years? A great source of growth in card issuance are the stores. The stores were closed. They lost footfall. So the major source of growth went through a very difficult situation. And now with store openings and recovery, you see that that's coming back. And that will continue, especially because now we have Camicado, we have Renner, we have Ucom. So we have a base that's available where we can explore the card issuance even more. On the other hand, we have initiatives to increase the share of that card in the strategy where we leave the private label that's just a Renner and with a bigger brand, then it's another way to increase share. It's going to have all the advantages for customers to buy at Renner. So many installments, interest free, and other campaigns that can happen through the card, it will still maintain an advantage in buying in the Renner store chain and stores and ecosystem. These initiatives in the ecosystem will coexist with the card. So when you think of a loyalty program, a CRM program, a Realize card is going to be an essential aspect of that program. So we believe that that will enable us to recover the Renner share or the Renner card share in the Renner sales. Thank you, Daniel. We would have one more question on the chat, which is related to the delinquency. I think it was already answered. And in collection or risk, if you have nothing to say about that, Daniel, we would end the Q&A session. No, I think I've already addressed that. Thank you everyone for your attention. Daniel, Fabio, would you like to make any final comments? We'd like to thank everyone for your presence. So it's the first quarter that we see post-pandemic. So we're very satisfied with our 1Q results and even more happy about the results we're seeing in the second quarter. I believe the next call will be in August. And have a great Mother's Day. Thank you, everyone. As Daniel mentioned, it was the first quarter. It was almost clean, I'd say. We still had an impact in the beginning. And in the second quarter, I hope things will be increasingly more normal. And in that more normal context, we see that very favorable. And especially for the company, because we've been working a lot for that to happen in the past months. So there's a trend and an expectation that we will see significant improvements in the upcoming months. Thank you for your attention and presence. Happy Mother's Day. Congratulations to all the mothers out there.